Hello traders, right, I hadn't intended to make this video, but I'll try and keep it short and sweet. But today on Twitter, which is, what day is it today? 3rd of January 2024, I mentioned how I enter trades on the print of the arrow. In other words, the moment the momentum breaks our given level. I use 19 and minus 19. The original RSI histo producer, if you like, use 20. As far as I know, it's an arbitrary level. The sooner you get into a trade, mind you, it doesn't really matter so much now, but because I've moved on so far with my scalping. But the point is, I might get an entry on this UJ. This is a 34 pip bar, and it might print the arrow after 5 pips or 5 minutes into an hour. So providing all the lower time frames agree, that's M5, M1, M15, all that lot. Timing as well. Remember, I like to time my trades. Watch that first 15 minute of the hourly bar close, maybe a little pullback, and then we can get in. Providing significant levels like the open and close of these two candles has been broken. I don't really regard the wicks as being very important at all, because the open and closes are the battlegrounds. The buyers have pushed up, the sellers have pushed down, and that can happen multiple times, and then ultimately you get a break of a significant level, and we're good to go. So that's the point I'm trying to make about the getting in when the arrow prints. It does have risk, but the only risk is that you haven't done your analysis of the lower time frames and the time of the hour to get the 2B reversal pattern and the 3 CRs on multiple time frames. You know, we've got so many brilliant tools, in my opinion, because they've been tried and tested over the 24 years I've been doing this, that gives you the confidence to take the trade. Planning. You know, we've got recent innovations, Dean's lines, all the other stuff, recent candles, all of it comes into play. It might sound complicated, but it's not, guys. It's just really, really simple, especially when over the weekend I've done a lot of research on that ICT crap, basically. So many stupid new, unnecessary acronyms for stuff that is just absolute rubbish, in my opinion. So anyway, getting back to this, what the whole reason I made this video as opposed to writing tweets was because I've actually done sort of a comparison between the two, between getting in early, which is obvious now, 34 pip move, I might get in after it's moved 5 pips, because the momentum was there. Momentum precedes price. Momentum dictates price, if you like, or there's all sorts of different ways you can word it. But then we get back to this. How do we enter after this H1 close with our big arrow? Well, that presents a little bit more of a problem, and it's what I've traded all the time up until probably a couple of months. I've noticed this, or get in early, because it will always cause a pullback. It creates a pullback. As you can see, you've got this. That is a vol bomb arrow. That's automatic as well, and it's a fast movement from green to red or red to green for the up vol bomb. There isn't one on this chart at the moment, but getting back on track. So we always get a pullback, which is why I love these ones, because the pullback will probably have happened after that for 15-minute candle or first 5-minute candle. Then we just get back into the trade using this method, but inside that hourly candle. I hope that makes sense. So, talking about the different, the method after the candle is closed, which obviously, as explained, is different. All I do is then I've drawn a line on the new candle. Excuse me. Oh, it's decided. Oh, there's a couple of levels on there. That's why. So we get rid of that one, and I'll make sure this one is correct. So we've got another one there. Sorry, I did have 3. I remember now. There was a 5-minute level, and I'll explain. I should have gone down the time frames and left them on there, but it's probably better this way. So we've got that new H1 candle, so that's the new H1 open. Drop to M30 and we'll see no doubt a perfect, I haven't checked this, perfect entry on the M30. Yeah, it's green. This alert will keep going off, I'm afraid, when I change time frames. So we're on the new candle after that H1 close. Get to M15. Don't really have to go down all of these time frames. So there's the new one. Really, I should have just jumped to M5 and looked at that for you. Right, so that is the close. This is the instant new candle. That's M5 pullback, and the point of this is that when you look at M1, it's not clear which candle you should have entered the long on after that H1 close, after the pullback, but you can clearly see it. It instantly started pulling back on M5, but on M1 this will look like that buyer seller situation I said about the battleground. So if we go to M1 now, remember we've had the big H1 close. We're looking at the pullback and we're trying to work out how best to get in long after that pullback. So here's H1. That's the H1 close, as you know. The M5, see M1, if you'd entered a new signal on M1, you would have had to suffer all this drawdown. Now we expect the drawdown, so just have a little bit of patience and let it do its stuff. It might go without you, sometimes it does, in which case, if it does, it'll pop up probably, as opposed to all this accumulation, distribution, whatever you want to call it, building of orders for the long side at every push down. What will happen is it will pop up and then come back and test that H1 high and then continue. It did it here, actually, if you look. But so what we want to see, so we don't want to take that one because that's in the M5 pullback area. We don't want to take that one, although it looks pretty good because it's still on M5. I'll put that other horizontal vertical line on there now, and you'll look at that trigger there on M1. It's a fake trigger, and that's important. I don't mention that enough, really. That's why I made this video, because it is a really good example. So we're going back to M5, and now you can see that second dotted green line is actually out of synchronization with the direction you want to trade. So whilst M1 was saying, yeah, there's a bit of momentum in there, all that is the algos gathering orders. Excuse me. M5 leads the way. H1 is telling us we should be looking for longs. M5 is showing us the pullback after that H1 close. And then if we pull this dotted line across a bit to the next green candle, that's still not broken any highs. It's still part of this jiggery pokery going on. And then if we look at the next M5 green candle, we can see we should be looking for an entry. We've turned green on the prior candle, which is there, and on M1 you can, and also we have closed above the H1 high there. It's not going to highlight for me, is it? That is the H1 high. Well, it's drawn on M1, but it was the H1 high, and then we can see, you know, we've got this final little pullback here, and then we get the correct signal after all those red M5 candles. We get the correct signal to hit it, which is the close above the H1 high, and then it's come back and tested, as I said, and then it's took off. But you know, these moves on these tiny candles are, you know, that's only 8.2 pips thereabouts, 8 pips, and this tiny move is next to nothing, and then the whole move is can't quite see that, 14 pips, 14 or so pips. There's a pivot in the way there, so I may have taken, if I'd taken this trade, I'd have just gone for 6 less the spread. As I say, that is what I go for. There's an obvious area where price is going to stumble. You may say, oh, you've got too many things on the charts, but the amount of times I can get trades to and from these pivots as additional ways. So I look at all the lines on my charts. There's a daily open line on here as well, which is like a magnet to price. These pivots are like a magnet to price. You know, so I know my stop is going to be minuscule, 1 or 2 pips. I know I'm going to get 5 or 6 pips out of that move. That's good enough for me. That might have been 10 pips away. So it's a 10 pip trade. It swings and roundabouts. You benefit, you lose. We're almost certain it's going to go to these upper levels, but that doesn't bother me. What I don't have, I don't miss. I'm happy with the fact that I'm entering using multi-time frame momentum, which gives me the tiniest and tiniest of stops. Occasionally I'm lazy, and you'll see on my Twitter feed that I've entered a little bit earlier, suffered a little bit of drawdown, 8 or 10 pips or whatever, and then price goes. That's because I'm confident the price is going to go, and I might want a coffee or have things to do or whatever. But if you're going to do it perfectly, which you should do as a beginner until you've got 1,000 or 5,000 of these trades under your belt, just follow the multi-time frame rules. And all of this comes from the 3CR, watching the 2B reversal, developing the 3CR, seeing that it 3CR down, knowing I had to have a 3CR up, and then knowing my M5, this was out of sync anyway, had a 3CR down, then I have to have a 3CR up before I can enter it. This is Aaron's fantastic indicator here, absolutely priceless. I use these 3CRs, but I also really rely on the momentum. And the other thing I said in the tweet that preceded this video was that I'm always looking for the best entries, and the best entries where the TMA slope is green, and note all that M1 TMA slope wasn't up to much at all, didn't really get an agreeable a double entry, apart from that first one, which is the dangerous entry. You could enter it, and that's an example probably of a lazy entry from me. I know it's going up. I've got 2 things. I know we're going to get this sideways motion, but I'm good to go with a safe stop. And again, with stops, you will know as an advanced trader that different pairs have different volatility. And it's quite rare that Euro and USD, UJ and things like that have massive spikes, unless it's around news or something catastrophic has happened in the world. These are the less volatile pairs, except when you have news. That's a caveat. Anyway, so that's it. Multi-time frame entry after the candle close, and really the only thing you need to check before the candle close when you get an RSI arrow is that everything is in your direction. Because what will have happened, the reason that prints and the reason you get that high volatility before the candle closes, during the candle, is because all of this has been done. That seems to make so much sense to me. All of this has been done before that massive momentum move. Okay, so that's why I'm happy to enter before the candle closes when I get my arrow trigger for momentum, and then if I enter after the candle closes with an arrow, with that same arrow. And the other thing to mention, the arrows do disappear. So I did mention this in the Twitter feed, I think, but I will have banked my profits. Say that H1 arrow printed up, it hit that pivot there, and that pivot reversed the price. The arrow would have been there, then it disappears. It's called repainting, but with momentum, the momentum was there. It hasn't repainted effectively. It hasn't not been there. It was there, and price reversed. So I hope that concept makes sense to you. Takes a while. Took me years of using the RSI histo before I realized I need to stop thinking of an indicator repainting, especially a momentum indicator, because the momentum was there. There's nothing wrong at all with the indicator. It's working perfectly. It's just that the price reversed and the indicator cancelled out the arrows or whatever. So I hope that helps. Have a great day and a happy new year to everyone that watches this video. Thank you. Bye for now.